One of the most difficult concepts concerning urban renewal is the method in which the county assessor collects the property tax revenues for the Urban Renewal Agency. Urban renewal alone is a complex topic, and it is further complicated by property tax collection regulations for cities and counties. Suffice it to say, the regulations concerning collections by cities and counties cause Urban Renewal Agency property tax revenues to be collected in a very confusing way. The three steps that we will illustrate in the next set of slides concern how the revenues for an urban renewal agency are 1. Calculated, 2. Distributed, and 3. Collected. All of the numbers in this set of slides are hypothetical and have been rounded for ease of understanding. Suppose a hypothetical city has 40 houses, each with a value of $100,000. The total assessed value of that city in the year prior to the formation of an urban renewal area would be $4 million. This hypothetical city forms an urban renewal area that contains 25% of the assessed value in 10 houses with a total assessed value of $1 million. In order to calculate the revenues for the first year of the urban renewal area, we will assume a 3% growth in assessed value for properties citywide, with the increases from properties in the urban renewal area totaling $30,000. We will also assume the tax rate for this city is $15 per thousand and that the first year TIF revenues are $450. The distribution step is the main source of misconceptions about how urban renewal revenues are collected. The misconceptions stem from whether a line item for the $450 of urban renewal revenues will appear on A, the properties in the urban renewal area only, or B, all properties in the city. Many people assume that the line item representing the $450 of urban renewal revenue will only appear on properties in the urban renewal area. That is not the case. The total amount of revenue that will be collected is only calculated by the growth in assessed value by the properties in the urban renewal area. The TIF revenues of $450 are actually distributed across the entire city. The source of the TIF revenues is still from the increased tax revenue of overlapping taxing districts. If the revenues are collected citywide, what would the property tax bill look like for the properties in our illustration? Each property would continue to pay $1,500 attributed to the frozen base of the urban renewal area. Each property also has $45 in new property tax revenue. The new revenue is split into $33.75 of revenue collected by the regular taxing districts and $11.25 collected by the Urban Renewal Agency. Again, each property has a line item representing urban renewal on their property tax bill, but the source of the money contained in that line item is still new tax revenue that otherwise would have been collected by the regular taxing districts. The next steps in the planning process for the City of Newberg are for the Citizens Advisory Committee to continue review and provide input on the planning process, with meetings scheduled for June 8th and June 29th. The city will continue to provide information on the city website and to plan for community input. The feasibility study will be presented to the City Council on July 20th. For more information, contact Doug Rux, the City of Newberg Community Development Director, at 503-537-1212 or doug.rux@newbergoregon.gov.